Hello guys, welcome to the Wednesday forecast and let's get right into the market. So first we have the EU pair. Well, the market has been doing absolutely nothing. Well, it has been trending down but trending very correctively, and that's very typical of Monday and Tuesday price action. And especially since in the last week we did get some really nice trends. So usually the week after a nice trending week we have this sort of price action where we just pause and then break to a downside, create huge wicks, retrace back up, and not really conducive price action. So what I'm seeing on this pair is that the prior price action did signal to us a range. So we were having this descending, then we broke the high, retraced, broke the high, retraced, broke the low, and got a nice candle, and then got a huge wick that was filled. But then we got this aggressive retrace. So not really clean price action and not really showing me anything to look for an entry. And looks like we are currently also breaking the lows and retracing. So let's move the lines. This would be the most recent low, most recent high would be here. This is the first counter trend candle. And we have the mark where it broke the low and retraced. So currently this is forming a descending structure. Now it's not really a clean descending because of this small pause and because of this huge wick and because of this aggressive retrace. So I'm not 100% confident in this descending structure, but if we do get a reversal, I will definitely be looking for a trade to the upside. Especially if we get more of a descending, then that would be a smaller descending inside of a larger descending. I would definitely look for a reversal trade. As I said, not really the cleanest price action, but if we do get some opportunities, of course, I will be taking them. If we get an ascending from here, I will look for a reversal to the downside. One thing that can happen, so we can get a large impulse down and then look for a nice flag trade. Since we know that on the euro pairs we can get a descending structure and then an impulse in the same direction, which would be to the downside. That is a common pattern. It usually works out, and I'm definitely looking for a trade if we get an opportunity to enter on something like that. That is it for EU. As I said, forming sort of a descending structure, and I'm looking for a reversal or an impulse in the same direction as the descending structure. Now let's move on to the euro and the Japanese yen, and this is exactly what I was talking about. Monday and Tuesday price action just showing us a range right here. So we did get a nice impulse down, but then we got an aggressive retrace. When I see an aggressive retrace, I'm not looking for any trades, so I can actually replay this sort of price action. At this point I was definitely looking for a short trade, but then we got this aggressive retrace, which made me stay out and wait for the break of the low or the high, which would be here. This is the first counter trend candle. And then what happened? Well, we broke the low, got a really nice candle, but not giving me enough confirmation, especially for the euro and the Japanese yen. I wanted to see a bit more. I wanted to see a larger push or one candle continuation to be looking for any trades, especially since we got a momentum shift in the prior price action. And then, well, we broke the low, created a huge wick, broke the high, retraced, broke the high, retraced, broke the low, created a huge wick. Currently this is signaling to me a larger range, so what I'm expecting something like this. Just a larger range, and of course there are liquidity areas when we see a range. Liquidity is below and above. The traders buying here, keeping their stops below, selling here, keeping their stops above. They are trading the range on the lower time frames. So we need to see what happens. Do we get some nice confirmation out of the liquidity zone, or do we just break and maybe start ascending and then get a reversal? That is a high probability pattern. Same thing to the downside. If we start to descend into the liquidity area, get a reversal to the upside, look for that nice trade. Also, what I will be looking for at this point, I'm looking for a large push up and the flag, or a large push down and also a nice flag. But as I said, once again, this is signaling to me a range and I need to see some clean price action. Today is Wednesday, so maybe we will start to get some nice moves. But this is not giving me any conviction or any sort of indication that I want to get in on the trend or in the market at all. And now we go to the Aussie and US dollar. So this one is actually the worst out of all the pairs. So we have this large range, and this is very typical after we had a huge trend to a downside. As we can see, we had a huge downtrend, that we start with this, I would say it's a distribution phase, you can say, or a pausing phase, or some sort of a, let's say, pause in the trend where the market just needs to cool down a bit, and maybe it continues with this nice large downtrend. We have to see that, of course. But when I see this, I'm staying out of any trades because this is just not giving me any conviction. So there was an opportunity to enter right here on this sort of a setup. We did get a nice push down, small pullback, no momentum shift in the pullback, and then a continuation to the downside. So at this point I was looking for a short trade. This was looking okay, so this was not bad, but for me personally, I didn't want to see a straight retrace back to the entry point, because on the Aussie and the US dollar I don't like to take this sort of setups where it needs to retrace a lot to the entry point. The entry point would be this inside bar, so right here, this level, the low of the inside bar. What happened then? Well, we got an aggressive retrace. At this point I was definitely not looking for any trades, because I know that we can just get this V and then range and then continue to the upside. And what happened? Let's see what happened. Well, we got this V and we continued to the upside as expected. Then we broke the high retrace, broke the low retrace. Now we did break the low and retrace once again, signaling to me a larger range. So this is not looking good. I'm definitely sitting on my hands, and we need to be careful of the liquidity areas if we do get that larger range, so something like this. And we need to see what happens, how the price reacts in those liquidity areas. Does it just break and retrace, or does it actually give us some nice conviction to the upside? Very important stuff, because the market is ranging 70% of the time, so we need to be able to first identify the range, second identify the liquidity areas, and third plan what we will do once the price reaches those liquidity areas, and does it just reach them correctively, or does it actually push out of them with some nice convictions. That is all that you can make a chart and backtest when we do see a range, what happens in the liquidity areas, and what does it look like when we break with conviction, or if we just break and retrace. So an example would be, well, I can't find it right now, but for the next forecast I may find an example of a range and how the price just breaks and retraces. So what I'm looking for a descending structure and then a reversal. Of course, descending structure into the liquidity zone. If we get a larger range, is of course high probability. Or I'm looking for that ascending reversal down, look for a nice reversal trade. I'm looking for a large push up, always looking for a large impulse, because usually after a large impulse we continue in that direction, so that's a very good sign. Same thing to the downside, look for a large impulse and then a flag, and that's about it. This doesn't look good. Let's see if we can get some cleaner price action, and now let's move on to the Aussie and the Japanese yen. So there was an opportunity to enter right here. So what I was seeing that we had this nice push to the downside, small pullback, no momentum shift in the pullback, continuation, clean close, so no wick, and this looked very, very good. But one thing that concerned me is the entry point was right here on this inside bar, and this would be too much. So this would be 43 pips, which is just too large on this pair, because if it did the retrace all the way back, it would signal to me a momentum shift. So I sat on my hands. I wanted to see a nice corrective structure to my entry level. What actually happened? Well, first I think we created a large wick. At this point, I was definitely sitting on my hands. And when we see a large wick, it usually signals to us a range or a reversal. And it did make a reversal at this point. So as we can see, the wick played out. We did get that reversal as expected. And then the price broke the high, created a huge wick, retraced. And maybe at this point some people were looking for a reversal trade. So maybe they were seeing this descending structure, looking for a reversal trade. But for me personally, I wanted to see a bit more, especially since from my personal backtesting, I found that on the Aussie and the Japanese yen, the reversal trades don't really tend to work out. So I need to see really clean price action. This was not that clean because of these bearish candles, and because it's sort of, well, I would say it didn't really break with some nice large conviction as I would like to see, especially on this pair. And then the biggest warning sign was this huge wick. So after this huge wick, I wanted to see at least a nice wide range, and then I would maybe consider taking a trade, but the prior price action was just not giving me that conviction. And then now some people may have been tagged in because this would be the entry candle. This is the most recent high. There are no inside bars, so if there is no inside bar, I'm looking at the most recent high for an entry. This would be the entry point, and maybe some people were tagged in with this candle. But as I said, for me personally, I think I would have also been stopped out. Let me check. Yep. So if I was in this trade, I would have been stopped out. So it's good that I stayed out. It's good that I followed my plan. The market seems to be a bit volatile also on the Japanese pairs. So a lot of movement. We can see this retrace would be a 45 pip retrace. So really volatile markets currently, the Japanese ones. And even if there was no volatility, this would not have fit my plan because of this huge wick. So currently we are stuck between the low and the high. I am expecting that larger range because of the huge wick. When I see a huge wick, I usually expect a range. And we need to see what happens in the liquidity areas as for all of the pairs. So do we just break and retrace, or do we break with some, just a second, with some nice conviction and then get maybe a flag or something like that? Also, what I am looking for, I'm looking for a nice continuation of this trend. So I'm looking for a nice impulse to the upside and then a flag. This would then be a reversal trend from a descending structure, very high probability. So if we get that sort of price action, I'm definitely considering taking long trades. Also, what can happen, we can get more of an ascending structure and then reverse to the downside. I am looking for a trade in that case. Or we can get a descending structure. Then I'm looking for a reversal to the upside. If we get a large impulse down, then that would signal to me a V, which usually tends to form this sort of a pattern. So let me draw it and then I will explain it. So we get the V, we get the range, and then we get a continuation of the second V leg. And then I'm definitely looking for a short trade. So this is a common pattern that happens in the market when we get volatility. So when we get this sort of a V formation, very important to remember that and look for it after you see a V in the markets. That's about it. This doesn't look that good as all of the pairs. They really don't look that conducive as they looked a week ago, let's say. So maybe there is a small pause before we continue with the nice trend, or just the price action needs to be sorted a bit and we need to wait, especially since I am seeing some volatility on the Japanese pairs. So definitely waiting for that to calm down so that I can employ my usual stop loss size. So that's it for the forecast, and I will see you guys tomorrow.